Hello everyone, welcome to our accounting class by Click Education, and this is our class number 2 on chapter 6 journal. Okay, let's start. Well, in our previous class we studied various factors that must be considered while preparing journal entries. Now we will learn more factors that we will need to consider while we will record journal. So this is our part 2 of factors to be considered for general journal. Then we will learn an important topic of accounting, that is discount. You are very familiar with this, aren't you? Of course, whenever we go for shopping, we look for discount. So we will study discount. Then we will know the classification of discount. There are different types of discount in accounting for different purpose. Okay. Then we will study how to record journal entries related to discount. And finally, we will solve a practice problem on general journal based on our today's topic. So let's begin. Factors to be considered for general journal part 2, and today is number 1. There will be no accounts under the name of individual or institution for income and expenses generally, though the income is incurred and expenses is due. That means we will not write any account named under individual or institution. Rather, we will write the name of that particular expense or revenue. It doesn't matter whether it is received or paid or they are accrued. We have to write the name of the accounts. So let's see how we have to record this. Okay. So example, salary paid to an employee named Arif, taka 10,000. Here you can see that employee's name Arif is mentioned with the expense name salary. So according to our formula, we need to record salary, not we need to record salary. We need to record salary, not Arif. So our journal must be salary account debit, cash account credit for taka 10,000. Because we know we never have to write the name of the individual or institution. Rather, we have to write the name of the expense or revenue. Here the name of the expense is salary, so we wrote here salary account debit, and we know we paid any expense mainly through cash, so we credited cash account, and that's why the journal is written or recorded. Okay. Then let's take another example. Commission earned from Rifat Enterprise but not received, taka 1200. So this time the amount didn't receive by us. So according to our rules, it is mentioned that it doesn't matter that you received or didn't receive that. You have to write the name of the expense or revenue. So here the journal entry is commission receivable account debit and commission revenue account credit. Why commission receivable are written here? Because we haven't received the amount yet, so it will be recorded as receivable. So we wrote commission receivable account debit, and commission is our revenue, so commission revenue account credit. Note this very carefully. You must write the name of the expense or revenue account and never write in any individual or institution's name during this for this type of transaction. Okay, so next one, number 2, amount of the goods decreases because of goods is used personally or for business, distributed freely or advertisement, stolen, destroyed, etc. So many reasons. Okay, so for all these situation, purchase account will be credited. The fact is, for goods, when it is decreased for these reasons that is described here, you have to write purchase account, and it must be credited, and it must be credited. So when because of this situation, if goods are reduced from your business, you must credit purchase account. You must credit purchase account. Okay, so the rule is goods purchased, purchase account debit, and goods used or distributed, purchase account credit. When we purchase goods, we will debit purchase account, and or when we will use or distribute goods, we will credit purchase account. When we will use or distribute goods for advertisement or any other purpose, we will credit purchase account. Okay, so example and solution. Here is the transaction. The owner withdraw goods for personal use, taka 5,000. Here you can see the owner withdraw goods. That means goods reduced from the business, and according to our rules, when goods reduced from the business, we have to credit purchase account, and when owner withdraw from business anything, we have to debit drawings account. So here the journal is drawings account debit and purchase account credit. Okay, okay. Then another transaction, goods distributed to the consumer at free of cost, taka 3,000. We distribute goods at free of cost when we want to advertise our goods. Because of distribution of goods, the amount of goods reduced from the business, so we have to credit purchase account. And for distributing goods at free of cost, the purpose is advertisement, so we will debit advertisement expense. So here the journal is advertisement expense account debit, purchase account credit. Advertisement expense account debit because we distributed goods at free of cost, so the purpose was advertisement, so we wrote advertisement account debit, and since goods reduced from the business, we credited purchase account. Okay, okay, all right. Then number 3, withdrawn from business means owner's drawing. So you have already known this, that withdrawn from business means owner's drawing. Okay, so when we will get any transaction mentioned that withdraw from business, we will consider that owner withdrawn from the business. But if it is mentioned that withdrawn from bank, there may be 2 cases, either for business or for the owner. So you have to confirm first that for whom the cash withdrawn from the bank. So if it is for the owner, so it must be drawings account, and if it is for business, then we have to record the transaction accordingly. So the rule is withdraw from business, we have to debit drawings account. Withdraw from business, we have to debit drawings account, or withdraw from bank, we have to debit cash account when it is for business. When it is for business, for withdraw from bank, we have to debit cash account, and when it is for the owner's personal use, we have to debit drawings account. Please listen and note this very carefully. When withdrawn from bank, only mentioned withdrawn from bank, we have to consider that the money extracted from the bank for the business. So we have to debit cash account. And but when it is mentioned that withdraw from bank for personal use, owner's personal use, then we must debit drawings account. Okay, so here is our example and a solution. Taka 2000 withdraw from the business. So since this is withdraw from the business, we can consider this as that the owner withdrew the money from the business. So we have to debit drawings account and have to credit cash account, because cash withdrew from the bank, from the business. Cash withdrew from the business. So drawings account debit, cash account credit. Drawings account debit, cash account credit. Another transaction, cash withdraw from the bank, Taka 5000. Here only mentioned cash withdrawn from the bank. So anything else didn't mention here. So we have to consider this money has been withdrawn for the business. So the transaction must be cash account debit and bank account credit, because cash reduced from the bank, so we have to credit bank account, and we extracted cash from the bank, so cash increased. So for increasing cash, we have to debit cash account, and for reduction in the bank balance, we have to credit bank account. So the journal is cash account debit, bank account credit. Okay, see the third transaction, cash withdrawn from bank, Taka 3000 for personal use. So here the phrase for personal use is added to the previous transaction, and we know for when it is for personal use, we have to debit drawings account. You can see in the solution section that third journal is drawings account debit, and since money is withdrawn from bank, so bank amount reduced from the bank, so we credited bank account. Okay, so drawings account debit, bank account credit. Okay, so number 4, bank account will be always affected by bank interest allowed or charged and charges of bank. So when bank allows any interest or charges any expenses or anything, so both will affect the bank account. Both will affect the bank account. You have to remember this. Bank never, I said in my earlier videos that bank never transacts any thing directly to the clients. Bank transacts never transacts anything with his clients in cash. They always transact with the account. So when bank allows any interest, they transfer the money to the bank account, and when they charges any expense for providing services, they reduce the bank account balance. So for both interest allowed and expense charged, bank account will be affected. Okay, so here the rule is bank interest allowed, so you have to debit bank account, because money in the bank has been increased for getting interest from the bank. So bank interest allowed, we have to debit bank account, and for interest charge or any charges of bank, you have to credit bank account, because bank balance has been reduced for charging those money or interest. Okay, so just remember this. When we get interest, so we will debit bank account, and when we have to pay any expenses, we have to credit bank account. Okay, so example and solution, bank interest allowed taka 500. So this time we are getting money from the bank. That means our bank account will increase, so bank account must be debit, and our revenue account is bank interest. Remember this very carefully. Banking interest, when we get bank interest or in bank allowed any interest, we have to write bank interest account credit, and we have to debit bank account. And alternatively, when bank charges any commission or expenses from us, so then we have to credit bank account, and we have to debit that particular expenses accordingly. Okay, so commission expense account debit, bank account credit. For because bank charged a commission from us, so it would reduce our bank balance, so we credited bank account. And since an expense named commission incurred, so we have to debit commission expense account. Okay, all right, next factor. Okay, so 5, very important one. We know what is depreciation, don't we? Okay, so depreciation is an expense on fixed asset. Because of, here is the definition written in the bill of the rules. Depreciation is an expense incurred by the decrease or reduction in the value of fixed assets because of using or any other reason. When we use any fixed asset for a long time, we have to consider an expense named or called depreciation. So it is an expense. Okay, so when we have to charge any depreciation on any fixed asset, we have to debit depreciation account, and the respective assets will be credited, including the term accumulated depreciation. So we have to credit accumulated depreciation account respective asset, accumulated depreciation account respective asset. That means the asset's name on which we are charging depreciation. Okay, so example, depreciation charged on machinery taka 800. So this time we are charging depreciation on machinery, so a respective asset is machinery here. So solution, depreciation account debit, accumulated depreciation account machinery, accumulated depreciation account machinery credit. So you have to remember this very carefully. When you have to record depreciation, then you have to debit depreciation account and you have to credit accumulated depreciation account and respective asset. Okay, all right. Number 6A, any asset, maybe it is cash or motor vehicle or other things provided or brought by the owner into the business, will be charged or recorded as capital, will be recorded as capital. So here the rule is, if any asset, maybe it is cash or motor vehicles or owners, any asset that is that he provided to the business or brought into the business, then we have to consider this as capital. We have to regard this as capital. So example, solution, the owner brought his personal motor vehicle worth taka 50,000 into the business for goods delivery purpose. That means owner had motor vehicle worth taka 50,000 and he brought this vehicle into the business for delivering goods to its clients. So this motor vehicle added to the business as an asset, and this will increase owner's capital also. So the journal entry is motor vehicle account debit, capital account credit. Why motor vehicle account is debited? Because an asset increased into the business, an asset increased in the business named motor vehicles, so we have to debit motor vehicles account. And since the owner supplied it to the business, so it must be recorded as capital account. So motor vehicles account debit, capital account credit. Okay. Another transaction, a loan of taka 20,000 paid by the owner personally. So this time the owner didn't bring any fixed asset, rather he brought cash to pay the borrowed money or any loan for the business. So loan is taken by the business and the owner is making repayment of that particular loan. So owner brought cash, so cash for bringing cash into the business, so it will increase the capital account. And since the owner make repayment of business loan, so loan must be reduced, so we have to debit loan account. We know any credit account when decreased or reduced, we have to debit it. When any credit account, a loan account is a credit account, so when any credit account decreased or reduced, we have to debit it. Remember this very carefully. Okay, so loan account debit and capital account credit, because owner paid the loan, so money came into the business from the owner side, so loan account debit, capital account credit. Okay, all right. 6b, this is just opposite of A. This time owner is taking anything from the business. Owner is taking anything, either cash or goods. We learned it in our earlier rules. Maybe it is today's 1 or 2 number. Okay. Anyways, rule is B, any asset, either it is cash or goods or other things taken or withdrawn by the owner from the business, will be regarded as drawings. We know this, but I wrote it here because I matched it with A. So when a owner provided anything or brought into the business anything, that will be recorded as capital, and when the owner takes anything from the business, that will be regarded as drawings. Okay, they are related, so I wrote them together. Okay, so example, the owner withdrew goods from the business owed taka 2,000. So owner withdrew goods from the business owed taka 2,000. So solution, journal entries, drawings account debit, and for goods withdraw, we have to write purchase account credit. So drawings account debit, purchase account credit. Let's move on to the next. Okay, so discount, our desired one, very important. So let's know what is discount. Here is a discount board in a shopping mall, right? Okay, so when goods is possible to buy in lower price than the predetermined price, that means price tag. We see in the shopping mall or stores that every goods has its price tag. So this is the price written on the tag is called the predetermined price. So when goods is possible to buy, that means you can buy in lower price than the predetermined price. That means price tag, amount in the price tag, then the marked down price, that means the reduced amount, is called discount. So when goods is possible to buy in lower price than the predetermined price. Let's say you bought a t-shirt from let's say SSC. So the amount in the price tag was 300, but you bought the t-shirt for 250. So the reduced amount 50 is called discount. So you got 50% discount. Congratulations. Okay, so classification of discount. I think you understood the definition of discount. So let's know the classification of discount. There are major two types of discount. and they are trade discount and cash discount. There are two types of discount in the business, that is trade discount and cash discount. So what is trade discount? Let's know. When seller sells his goods in a lower price than the predetermined selling price, it considered as trade discount. So from your example that you bought a t-shirt from SSC, the seller sold his t-shirt to you at a lower price of taka 50. So he discount allowed you to you 50 taka. So the shop allowed discount 50 taka. So this is called trade discount. So this is called trade discount. So you got actually trade discount. Okay, so you have to remember this. Trade discount actually occurred when we sell or purchase anything. Trade discount occurred when we sell or purchase anything. Okay, and what is cash discount? The rebate that is provided by seller to buyer to settle the debts between them quickly is called cash discount. Okay, so cash discount is allowed or received when debts are settled down. When debts are settled down. Okay, so cash discount allowed or received during the settlement of debts. Okay, so remember this two very carefully. Trade discount occurred when we sell or buy anything, and cash discount occurred when we want to settle any past debt. Okay, clear? Okay, so now we will know the classification of these two. Okay, so trade discount are two types, and cash discount also two types. So trade discount are purchase discount and sales discount. Purchase discount is actually from purchaser side or buyer side, and sales discount is from seller side. So when you are purchaser or buyer, you will consider your trade discount as purchase discount, and when you are seller, then you have to consider trade discount as sales discount. Okay, from your example, you received purchase discount and the SSC shop allowed you sales discount. Okay, so cash discounts are discount allowed and discount received. When you pay anyone less than your debt, you received discount, and when anyone or someone pay you less than his or her debt, then you are allowing discount. Okay, so these are the classification of discount. Remember this very carefully. It will help in every cases of recording discounting discount journal. Okay, it will help you in every cases of recording discount journal, and later also we will see this later. Okay, so journal related to discount. Discount allowed, when the case is discount allowed. So discount allowed account debit because it is expense, and debtors account credit. Why debtors account is credited? Understand it very carefully, that when you allowed any discount to your debtors, you have to write discount account allowed account debit and debtors account credit. Remember this very carefully. You have to allow discount when your debtors are paying you, or when your debtors pay you, you have to allow discount. When your debtors pay you, you have to allow discount. So discount allowed account debit, debtors account credit. Okay, and B, discount received. You receive discount when you have to pay your debt to your creditors, and he or she allowed you some rebate on the debt. Okay, so creditors account debit discount received account credit. Creditors account debit, discount received account credit. You have to remember this very carefully, that when you pay any debt to your creditors, creditors can allow you a discount. Creditors can allow you a discount. So you will get discount. You will receive discount. So the journal entry for discount received is creditors account debit, because you have paid, or you paid your debt. So creditors will reduce and you have to debit creditors account, and discount received is a revenue account, so you have to credit this. So creditors account debit, discount received account credit. Please note this very carefully. When it is the case of discount allowed, debtors account will be associated that in the journal. Debtors account will be credited in the journal entry of discount allowed, and creditors account will be recorded in discount received journal. Creditors account is associated with discount received. Okay, all right. Example. So Taka 9,000 paid in full settlement of Taka 10,000 to creditors. Taka 9,000 paid in full settlement of Taka 10,000 to creditors. That means in the past you had a debt of Taka 10,000 to your creditors, but in the settlement, the creditors allowing you to pay 9,000 instead of 10,000. So in this transaction, your creditors your creditors must be debited by Taka 10,000, because your debt was Taka 10,000, but you paid Taka 9,000. So cash must be credited by 9,000, and the difference between the balance is your discount. So discount must be credited, because you are receiving actually the discount. So the journal entries is creditors account debit, discount received account credit, and cash account credit. Okay, because you paid the creditors the debt amount and less than the debt amount, and the difference is recorded as discount received account credit Taka 1,000, and you paid Taka 9,000. So cash account credited 9,000, and your debt was 10,000. So creditors account debit 10,000. So there was a settlement between you and your creditors. Okay, next transaction. Taka 6,000 received from debtors in full settlement of Taka 7,000. This is just the opposite of the previous transaction. So this time you are receiving the amount and allowing discount to your debtors. Okay, so remember this very carefully. When you pay when you receive your amount or payment from your debtors, you have to allow discount. Okay, so discount allowed must be debited, and cash that you received from your debtors, that also be debited, and your debtors that paid his debt to you, he or she must be credited. So the journal entries: cash account debit that you received Taka 6,500, and discount allowed account debit that you allowed to your debtors, and debtors account must be credited because he or she paid your debt. Now it will reduce the debtors account, so debtors account credit 7,000. So remember this two transaction very carefully. It will be questioned in your exam paper. So most of the time I found these two in the question paper, so so that I discussed here. So these two transactions are very important. Those two transactions are very important. So okay, then practice problem. So we will now practice this transactions. There are 7 transactions given. So let's solve this problem. Okay,